Hello and welcome to Exchanges for another week. Finance and your own personal finance. How do you define it? What about it is really, really passionate to you? And do you actually know when you've achieved financial autonomy? These are the questions that you guys have been sending me. So therefore, I wanted to get someone in that has an absolute passion for it and so infectious about talking about finance, the behaviour behind it, and how we do what we do with money. And that's why I got in Betsy Westcott, who needs no introduction. You'll find her in pretty much all major media outlets. She's a brilliant orator in terms of this space. And so without any further ado, here's Betsy. Betsy Westcott, welcome to Exchanges.
Hello.
I first and foremost want to sort of take people through where you've come from, because you've come from a banking background and come from a world where money, and because I did too, so I've come from that space where money has always been something that, because it's part of your vacation, it's certainly where you are. What were the things that in banking particularly that really sort of caught your attention to then go into what you now do in your vocation, which is financial coaching and financial education?
Yeah. I mean, first of all, I never intended to be a banker. I was like, that was not my
Does anybody?
I don't know. Certainly wasn't me. And no
No,
judgment if that's you.
I know. So I agree with you that. Like, that's why I was like, does anybody, like, all of a sudden it just was an opportunity, and I was like, actually, okay,
Yeah.
I'll just do it.
Yeah.
Was it the same?
Yes, I thought I was gonna be a fabulous hotelier, making beautiful experiences for people. I love travel languages. And then a guest was fairly senior at National Australia Bank, and he thought that if you took people who were good with people and then taught them banking, you could change the culture of banks. Because at that point in time, it was circa 2010, banks didn't have a great reputation. I don't know if it's
Nope.
much better.
Yeah, I remember that feeling too, right? It was like people in culture from banks were running around everywhere trying to pick all of these sort of 20-something-year-old people up that,
No.
had energy. They were like, we want you to come change the culture. I'm like,
Mm.
okay.
Yes.
And then you get into them and then you're like, that's not going to happen.
Yeah, it's gonna take a tsunami of happy and customer-centric people. But I really loved it. It was like the lifting of the veil on money for me and really
Mm.
understanding how money worked, because growing up, that was always a point of tension in my life, and I very much could see that those that knew it and understood it could create opportunity, freedom, and choices, and that's what I wanted to. So I was really excited to get in there and just learn as much as I could. I started immediately having tea parties with my girlfriends, being like, "Gals, come over. We're going to learn how to like grow our superannuation and buy houses today," and would start teaching them. So the teaching part came quite quickly. But what really fascinated me, particularly as I got into private banking and I was advising very wealthy families, individuals, business leaders, I'd done my training in financial advice. I would watch people say what they wanted, and I would watch how they'd live their lives. And I would watch, because in private banking, you have a team of experts around the client, the relationship manager, the planners, the investors, the insurance, all, there's so many. Would put these beautiful plans and things together for clients, and they wouldn't always follow them, or they would part follow them and not. And I was like, there's something else going on here, because you've got all the resources and all the information at your fingertips. There's nothing stopping you from taking the step to achieving what it is that you want. And yet they weren't doing it. And that's where I really got interested in the psychology and the behavior of money, and, why do we do what we do, and how do we form these beliefs, and how do these patterns kind of play out for us across our lives and across our careers, and how does that happen intergenerationally as well. So that's what really fascinated
On that,
me.
so just because that is what I'd been part of the macro team, right, in your world of private banking. So I would be part of the team that would bring in all the macroeconomics, all of the investment opportunities. And I remember seeing that too, because the reason I want to get into your behavior stuff, which is, my stuff that I absolutely love as well, is that you could give, and this is, again, it's in the theory of economics, which is, basically people act in a full rationale idea with perfect information. Well, clearly that doesn't exist, right? And you've just told about exactly that, right? Even the most wealthy people, which, has this connotation of also being educated, that's not necessarily
Mm.
true,
Yeah.
as you well know.
Mhm.
But it also comes out with this idea that you are giving them perfect information. You are giving them what you refer to as their knowns, yet they always seem to fail to follow through with the known information. What was the behaviors that were really catching your attention that was not just stopping them, but actively going against your advice?
Oh, there's so many variations of it. I would think back there would be those that were very educated and earning really high income and always in debt and late with their tax bills, and you just couldn't get it together financially. You would see those that were very financially astute, um, but had terrible relationships and really suffered from displays of like chronically not feeling like enough or not having enough. And you're like, you have all the money in the world. Like,
Mhm.
what else do
What
you
why
need?
Yeah,
you know,
correct.
you could see the way that people would respond to different investments or even just show up at events. And that whole, you could see how like those that really measured their self-worth by net worth and those that didn't. Sometimes you would meet people who, were incredibly wealthy, but you could see that there was such richness in their lives in terms of their relationships and the work that they did and the way that they wanted to use money. And that really fascinated me. And I wanted to understand more because we feel it in our own lives. I'm sure you feel it in yours. There's rules and there's history and there's meaning about money that shapes who you are, and some of it is really positive and it's working for you and it's enabled you to be who you are. And then the stuff that shows up and it is not at all helpful, and often it's unconscious. Other times you're kind of aware about it, but it's really hard to overcome the compulsion. And I'm just such a big believer that knowledge is power, and I used to think it was just the financial knowledge, but now I understand it's the combination of that too, that self-awareness and understanding around who you are and how you relate to money, and then marrying that without a strategy around how to money that really enables you to create that authentic, sustainable wealth and wealth beyond dollars, like a wealthiness, a richness in your life as well. And that's what I want for myself. And that's what I try to help my clients have too. I think we need more of that.
Yeah, I'd agree. And so the one that I want to get back to there is
Yeah.
value, right? So that's what I refer to as the value trap. So,
Mm.
capital is not the only valuable. You've got time, you've got emotion, you've got belief, you've got, effort. They're all part of the valuation of value.
Mm.
With those people that clearly are on the idea that money is something to be consumed, money is something to be shown.
Mhm.
What were the behaviors for you particularly that really you couldn't break with them? Because they are the hardest ones. I know exactly what you're talking about, those that have really high-end jobs, really high educated, but are always spending and are doing a level of spending that they would argue to you as, it's equivalent to what I'm doing, right? I'm making X amount of money, therefore I'm allowed to have Y amount of money going out.
Mhm.
How do you deal with those kinds of people? Because for me, they're the ones that fascinate me the most in that they have everything but think they have nothing.
Mm. They're often very disconnected from themselves,
Mhm.
and they're looking externally for validation. And it's always those external metrics around how much money do you have in the bank, what's your position of power, what influence do you have, how do others respond to you. And the problem with that is like there's no limit. You never arrive, you never find that place where you're like, I'm rich enough and powerful enough now, I can be happy. And so it's, if there's that disconnect from self, where that's the disconnect from self-worth, self-value, and deciding what's enough and what's and meaning beyond numbers, um, they just get trapped on that pursuit forever. And so it's really And it's not just work that I alone will often be able to resolve them. It's going to, and it, first of all, one, do they want to change? Often
Yeah.
they don't.
Yeah.
If they
Correct.
do want to change, awesome. Let's start working on that self-awareness. But it might need, support from other professionals as well to really get into the crux of that. In my work, I always want to do no harm, and I'm very cognizant of where my limits lie and where some people are really need to going to get professional therapy and things like that to support the evolution as well. But yeah, really helping them tap into like what's the legacy that they want to create? How do they want to be spending their time? What makes them feel like life is valuable? What are the relationships that are most important to them? And really starting to tap into those things and define it. Something that I always find really fascinating in my work is I'll ask people, what do you want? What are you working towards? What's this life that you're building? What's it about? What does like a rich life, a good life look like? And they really, really struggle. And sometimes it's an element of we're too scared to articulate it in case we don't get it. We actually have never spent time asking ourselves because we've just kind of been prescribed. And it's so easy to be prescribed what success is in this day and age. Like, just open up your phone and there's like countless messages coming at you. Um, and
Can I ask you then, just to interrupt,
yeah.
can I ask you what your goal would be?
Oh, my rich life? Oh, yes. Okay. In my rich life, first of all, I have a very spacious week. So I work and I get to choose who I do work with, and it's work that has impact and meaning. Um, but I only work 3 days a week, or I work 5 short days a week, ideally. I'm a really present parent. I am a really present partner, and we have fun and intimacy and adventure together, as well as some stillness. Oh, stillness is so nice. We have a home that's really welcoming and we entertain people. I spend time in my garden. I get to go surfing. I can be generous with my time with people I know and people I don't know. I can afford everything I need and still have lots left to give. And I've got numbers around that, but it's those kind of elements which really contribute to my rich life and which I'm really consciously curating with my business and with my time right now. And I feel really lucky that I can do that as well.
Yeah, because that's what you're asking is why my next part, going back to what you were talking about before, were those people that don't want to change or, don't know how to answer that question is the bigger, broader question for you is Australia is a bit addicted to debt, particularly around housing and particularly around the perception of housing. I'm like you that, my house is all about that concept, which is being open, being attractive. I'm doing the renovation on my own house right now. Do you think though that because there is an outward display of wealth that comes with housing, there's an outward display of that ability to reach and show that constant capital growth with debt in Australia has become a behavioral issue that we are now possibly losing control of?
Oh, that's such a good question. Yes. I mean, is it driven just by individuals? Is it also
But is it cultural as well? Because, we have
cultural?
just we've just had, we've got a government that is actively helping first time owners with 5% deposits that are driving demand. We've got
Mm,
banking systems that are driving housing demand. We have a
where
discussion constantly about the identity that everyone in Australia should be able to have access to housing. It is the number one asset in most people's portfolios.
yeah.
All of that tied together. I know there's a massive question, but I really wanted to sort of get your view on it because there's a behavioral slash cultural element to that
Yeah.
that is driving our absolute want for property and therefore our absolute drive towards debt because we are at what about our 180 to what is it 1.8 times the numbers for debt to equities and all that kind of stuff. Like where do we get with that point? Where do we look at it from the point of view going back to your beautiful answer, which is, your rich life, as you said it. At what point do we have to sacrifice, or not even like sacrifice, is a terrible word. at what point do we need to find the equilibrium between understanding that having the life that you want and getting there, A, takes time, but also needs to be
Mhm.
understanding the behavior of what's driving you to get something that may be at this point in the cycle not achievable yet.
Yes. Oh, that's such a big question. Okay, coming back.
Yeah, I just spoke to you for about 60 seconds of that question. That's huge. Sorry.
So coming back to like housing and the astronomical values that are there, I think there's so many layers to this problem. Like it's
Mm.
not like a if
And I
this
definitely
is
don't expect you to fix it with one question because, like, it's just not fixable like that.
yeah. I mean, one thing is like like the view that your home is an investment asset, in my opinion, is wrong.
Yeah,
Like property is an investment, but your home as like a wealth creation asset, it's a place to live. We over index on like, the value of our homes and just ignore the fact that it's really something we consume. It doesn't earn income. The debt's non-tax deductible, and you only realize the gains if you downsize, which most people don't ever want to do. So it's just like paper profits. It's nothing you can actually realize that much.
yeah. I argue, like, when did a home become a house?
Mm.
Because I
Mm.
love your word because your home
Yes.
has a very different that sentence has a very different connotation to my house,
Mm.
which my property, which is therefore my asset. My
Yeah.
home, and so that's probably also part of it. When did we inflect from it being my home
Yes.
to being my house?
Yeah, and I don't know, but
Yeah.
whenever that happened, I think was the beginning of the end. Then there's like the policy of, lack of production, the big concessions, and it just really, incentivizing people to be very speculative with housing, which just kind of just creates this fuel. And then at a political level, we've not been tackling these issues. We've just been fueling it with these like feel good sugar hit policies. Even this 5% deposit, I'm not happy about. 'Cause
I'm not happy about it either. Like,
yeah.
I as somebody was, rightfully pointing out, if somebody has saved up 15%
Mhm.
with this new policy coming in on a month, because you and I are speaking on the 1st of September, so a month away.
Yeah.
Let's say they're gonna get a house in Brisbane, for example,
Mm.
that may be 700,000 to 800,000. Under the new rules,
Mm.
they could actually gear themselves up to $1,000,000 and use that 15% to turn it to 5%,
Yeah.
and away you go. I mean, that's why I'm asking the
So it's
question
like
about
bigger is
our
better.
yeah, exactly, and the debt binge that comes with that, right? So,
Yeah.
instead of having a mortgage that might have been only 600, 700,000, you've now got a mortgage that's 950,000.
Yeah. And, just because you can, like, afford to repay it doesn't mean, like, that's the debt that you should be taking, and really understanding the consequences of spending your life paying off a home and the opportunity cost
Mhm.
for other wealth creation that's actually gonna create real true freedom and, choice and opportunity when you actually have the opportunity to pay down a house. Um what was the second part of that question? It was a big question. It was really
It was a huge question. So, like, the other part was, the fact that we are sort of behaviorally, culturally addicted to housing, and because I wanna get towards the discussion about you said it before, about income generating, you know,
yeah,
savings
yeah,
and non-income generating savings. A house is obviously purely only a capital gain if and when you sell it,
yeah,
versus, you know, investing in or even just saving in cash,
yeah,
you know, capital, sort of some form of fixed income, capital return, shares,
yeah,
other forms of investment. That's the next part of the question for you is why are we so tall poppy syndrome, I'm gonna say, on investment income generating material versus a house, which doesn't have the same connotation.
yeah, and when you say tall poppy, what do you mean by tall poppy in that
So,
context?
you and I are a little bit different because we work in an industry where talking about money is fine. But
Yes,
the majority of people, when you talk about money, you can see it in their eyes that they'd rather crawl up into a tiny ball and not talk about it.
yeah,
Because again, getting ahead in Australian culture is certainly not something that we like to openly talk about. And I'm with you. You said something before beautifully, which is owning your own future and owning your own wants and desires and saying them out loud. How do we get around that? Because purely we should be trying to concentrate people on income generating productive investment
Yeah.
versus house investment,
Yeah.
which we're calling our home.
Well, and I think, you know, what's fueling this is this, it's kind of capitalized on the lack of financial knowledge that most people have. And this, you know, home as something to buy and own is a really simple concept. And I
Mm.
think it's kind of a conflation of a lot of things, but um, people can put their hands on a property. They can see it. They're like, I can see what I've bought. And, you know, we don't want to spend the time, you know, going through the detail, getting to understand the difference between assets, you know, something that consuming an investment, something that's generating income. And we're just like, okay, cool, shortcut, want to build wealth. Okay, buy home, pay off home. I'm now wealthy, rather than going, okay, you know, how much money do I need to live? How can I get to a point where I build up other assets that can replace that income? What are the different pathways to get there? And it's, you know, that's all takes a little bit of work to spend time building that education and building out that plan. And
Mhm.
so we're just like, oh, just buy house, pay off house, buy second house, buy a portfolio of houses. That's all I need to do. Let's just go. I think that's a part of the problem as well. It's this lack of financial education, showing people profits of housing growth and going, cool, just do that, and not really asking a lot of detail. And
'Cause
it,
that brings gearing in, right? So that gets back to my original question about debt, right?
yeah,
The other thing that people forget is that the reason why housing has physical capital growth so high
mm,
is it's geared, right?
yes,
Because you've put a mortgage on it, right? You've
yeah,
put some form of debt. So you get all the bank ever wants back is the money they borrowed off you.
yeah,
Whatever the gap is what you make.
yeah,
And so I think that's what also fascinates me about this is and having someone like you who's come from banking, who now works in financial advice and financial coaching is
mm,
it's so attractive, the big dollar gain.
yeah,
It's so attractive
mm,
for obvious reasons, but it's like we ignore the risk that we're taking at the same time, which comes from gearing.
yeah. And the
How do you
cost of
Yeah,
gearing.
correct. Yeah.
Like, because a lot of people, when they're investing and they're telling me about their, you know, property purchases and sales, they tell me what they bought it for and what they sold it for. They don't account for the stamp duty, they don't account for the insurances, they don't account for the maintenance costs, they haven't accounted for the interest that they paid.
Mhm.
The performance is a lot different when you actually get to the detail of, like, net, what did you make? Not just what did you buy, what did you sell, but what did you actually make? Very different figure.
Yeah, and so on that,
Mm.
you worked in banking. Tell me about the interest repayments. I mean, I love this because banks bury it in, like, the 31st and 50th page of their plan of, like, how much interest if you were to pay out a 30-year loan.
Ah,
It actually
paying for
is.
your house twice and a bit.
Right, exactly, right? So it can be your entire purchase price plus
Yeah, twice over. You've paid for that house twice.
twice over, and that's lost,
Never. Yeah.
right? That's lost in this, and so then the next argument
Mm.
that comes is on the investor side, negative gearing. So
Mm.
my question for negative gearing for you is when and why is a tax policy an investment policy?
When and why is a tax policy an
Yeah,
investment?
why are we so attracted to a tax policy as an investment opportunity? If
Yeah, because again, we're not reading the fine print. Because, like, negative gearing really relies on you making a capital gain over and above the money it's cost you to hold this along the
Mhm.
way. Because literally, negative gearing means that you are spending more money on this investment than you're actually making, and, like, we're gonna compensate you for that. Yeah, making no sense to me.
Yeah.
Um,
Because
and
this is all part of the behavior as well. All part of
mm,
your beautiful world is
mm,
exactly that. Like, as you said, if you're losing money with the yield that you're getting, because that's
mhm.
obviously the income from the renter, you're having to top up the yield to pay for the loan. Why is that an attractive strategy? I mean, again, this like, we're going massively broad here, and I do apologize. It falls into things like how high tax income is in this country and all these other things, which is
Mm,
what people are chasing.
yeah.
But what for me, that I keep asking this question to myself:
Mm,
why is negative gearing an attractive option as a behavior? Because when you actually boil it down, as you just said before, You are literally buying something that's losing you money on the hope that in the future it'll pay you more.
Yeah, and like, let's hope it does, but I've seen people get burned, and
Yeah.
badly, when not only, does it, cost them money on the way, but then they have a massive capital loss. They sell it for less than they bought it from, and they've just been, you know,
Why?
absolutely wiped out with it. And it happens. Like, no, you're not hearing about it on social media, but it happens. And I've seen it happen to very high income earning, um, intelligent individuals that just didn't slow down, do the math, understand what they're investing, understand the risk. And yeah, sometimes the roll of the dice doesn't go in your favor. Um, we're also quite obsessed with tax, and reducing our tax. Like, I can't tell you, because, for example, if you're a self-employed person, everyone's like, oh, great, you can write down your tax and you can write off this and write off that. And I can't tell you how many people I've worked with who have um, written down their business income with all these deductions so that they're basically earning 20 grand a year, and they're so proud of it. And I'm like, basically, you're telling me your income for the year is 20K. Also, if you want to borrow some money, no one's lending you anything on that 20K income. Like, it has a consequence. But we're so focused on like spending $1 to save 30 cents or 47 cents, and don't go, wait. Does this actually make sense for me to do that? Like, and I'm using broad strokes here, but there are times where, certain strategies do make sense and do get your head. But you've got to get into the detail. It's got to be contextual for your financial situation and what your goals are, as to whether that is a good strategy for you,
Mhm.
whether that's going to be a financially beneficial strategy for you, um, or not. But our human brains are pretty lazy, and we don't like a lot of detail, and we just want shortcuts. We're just like, what do I need to do? What's the quick win? What's the fastest way there? And don't spend that time really asking for the detail.
So you've led me perfectly into the next question I had. You
Yeah.
spoke about influencers before, but also
Mhm.
about quick fix and
Mhm.
ease. How have you seen the rise and rise of influencers? The fact that some of them are selling you pipe dreams, some of you selling, beautiful and fantastic education, but
Mhm.
then also some of them have come from nowhere and are telling you information that they themselves may not have actually experienced. How do you take what's happened with influencers, particularly considering what you and I do? And I get the oxymoron and the everything in between about you and I doing this right now. This is going to come out in social media. I get
Yeah.
the whole thing there.
Yeah.
But talk to me about finfluencers and what you've seen in your career about where they sit.
Yeah. So I love the idea that financial education be more accessible. I love that things like investments be more accessible. But like everything, have a curiosity and a little bit of and the word is escaping my brain right now, critical thinking, and go, who is this person? Why are they telling me it? And what's in it for them? And
Mm.
be really curious, like, what's their professional background here? And that's the problem with this day and age, with anyone can upload a video and share information, and it can be really polished. They can be great at producing videos that look very compelling. It doesn't mean that they actually have financial education and the expertise to be guiding you. And it's, yes, they might have done something for themselves and that's been helpful, but the world of financial advice is heavily regulated for a reason. Money and how you spend it and what you do with it has a dramatic impact on your life. And you following the advice that's not appropriate for you, that's not going to help you achieve your dreams because someone else told you to, and they don't have the knowledge and the care to realize what a privilege it is to be able to advise people around money and to guide people around money, and the care that needs to be exercised when doing that. That's the dangerous part of it. So I'm a little bit like, there's two parts where I love that education can be more accessible, that you don't have to, be a part of a certain club or socioeconomic group or level of education to learn about money. I think that's good, but it is a privilege to be able to educate people about finance And because of the potential consequences, a lot of care should be exercised. And if you don't have that training and background, you don't know what you don't know, and you don't know the harm that you can create.
Yep. My concern with it is that it's, as you rightly pointed out, it is general advice dressed up as personal advice for
Mm,
the masses.
mm,
And my biggest issue that I've always said with particularly with financial advice is that it's not a cookie cutter, right? It's not. It doesn't fit everybody. Some of the biggest players in Australia, for instance, have huge followings for good reason, but they are offering you cookie cutter
yeah.
concepts, and when they don't work, they don't work. And that's why I'm with you. Again, financial education and financial literacy in Australia is well known. Unfortunately, we are one of the worst in the developed nation. And social media is easy, right? It's really quick to consume. It's very simple to consume, and all of that in between. My only next question on top of that is, does it need to become not just not regulated? I think is the question: should there actually be government mandated education systems that actually educate not just kids but adults in this space to take it away? Would that help that problem? I'm not saying it would fix it, but would it help the issue around getting social media advice that may not be actually in your interest?
Yeah, I think high quality financial education that is freely and readily accessible is a really good thing. Um, and and really spending that time educating, empowering people to be able to make these decisions contextually in their own lives would be really beneficial. But I would much rather see high quality, engaging. Like, who said money education had to be bloody
Boring.
boring? Which often, when it does fall in these institutional government hands,
It is dull.
so beige. And you're like, God, have a personality, why don't you? Which is why influencers, they do so well, because they bring personality to it. And there are some out there that are educated and qualified, and they're really great, and I love them. But there's a plenty out there that just just Johnny on the
You said
street.
before, right? You said it. The way you've got to remember, they're also slightly a counterparty, right? So
Mm,
you said that before, which is what I wanted to pick back up on, which is
mm.
what are they incentivized by, right?
Yeah.
So if they're presenting you some form of financial
Just use my
information,
code to get $20 off, means they're getting paid for it. And
correct?
so many of it blows my mind, because 'cause I'm like, "Isn't there rules against this?" Like, you can't be out there pushing product, pushing this, and yeah, and it's, just
Because
crazy.
again, I'm going to bring you all the way back to banking. One of the things that always used to fascinate me about banking is
Mm,
banking by its own very nature. The bank is the counterparty to the client,
mm,
right? They are lending you money, and so therefore they make money off you. So they've got an incentive that's technically against your own interests by the
mm,
fact that they want you to stay in the loan for the 2.5 times over of your own house.
mm.
My thing that part of what I've always worried about with the world that you and I work in with finance and financial advice and what have you is that I was always very aware that I am also the counterparty
Yeah,
because I was receiving the money for the advice I was giving.
yeah.
And was the money incentivizing me to make decisions that were against the client? And that's what you can't do
Mm,
with finfluencers because they don't know you, even though they might sound or feel like they do know you. They don't know you.
yeah.
And again, so all of that's why that's part of the question. I'm not going to let you answer that because we're going down another rabbit hole because I do and fully aware that I've now run out of time with you. So I'm going to ask my last question, which is
We're just having
Betsy
so much fun.
I know, exactly, right, and I could go on forever, but I try to keep these so you've
Tweet.
got other things to do. Betsy Westcott, if you're in charge for just
Mm.
one day, what would you do?
Oh, so fun. Well, first of all, I would get everyone a little financial admin fairy who is independent and working in their best interest, just to kind of tidy up everyone's finances for them, renegotiate the bills, set up that automatic investing savings, tidy things up. I think that would be helpful. Like a little Dobby, if there's any Harry Potter fans, but for your money. I would make sure that everyone had access to high quality, independent financial education that taught them not only how to money, but really helped them uncover, what is it that they really desire in life? How are their thoughts and feelings and beliefs driving their money behaviors and financial outcomes, so that they could really make their own decisions around what they're going to do financially. I'd work on closing the gender wealth gap if I could, introducing paid parental leave that, was generous to families, along with that accessible early childhood care education, but not in its current state. I'd like it to be more like government run, like the education system, because don't get me started on childcare providers and the profits that they make. And then I just start a slow money revolution where spending and investing was really aligned with meaning and long-term impact, and that everyone just took their time to build quality over quantity.
Mm-hmm. That is a brilliant way to finish. Betsy Westcott, thank you so much for joining Exchanges.
Thank you, Evan. It's been such a pleasure. I really appreciate it.
Big thank you to Betsy for coming in. Loved her infectiousness, loved her points of view. She's so open about what needs to happen, how we can do it, and everything in between. So big thank you to her for coming in. And I really do hope it answered some of the questions that you guys have been sending me with emails and also on socials. On that, don't forget, wherever you've heard, listened, watched, or everything in between to this, please hit the subscribe button or give us a like or even a review. That'd be great, because the more we can grow the Exchanges group, the better that is. The email is exchanges@evanlucas.com.au. You can also hit it up on socials as well. Again, thank you for watching, listening, and everything in between. Until next week, I'll see you then.